Jimmy Carter realized that he needed to do something to help small business. And he anticipated that he was going to reduce the taxes on dividends. He didn't know small growth companies don't pay dividends. They don't understand entrepreneurship very well in Washington, as we
question, right?
Yeah.
It's like a question that books have been written about. Yeah. I mean, it's a question that, like, actually, you know, nearby cities in California are asked people in Silicon Valley, like, why can't we be more like this?
Yeah.
Africa is actually interesting. Technology is still somewhat, lowercase opportunity for a lot of people.
I found is that we found a lot of international, basically from all over the world, even though they're physically located somewhere else, but they're going after the US market.
Do we think that is this a great team that can execute, because we know they'll have to change course 4, 5, 6 times? Does their business model or their thesis about what they're going to do pass a test of reasonableness? And then beyond that, they've got to get a product out in the market and see what happens.
I asked myself, would I join the company? Would I work for this founder? And if I'd be excited to join it. That's a great litmus test of kind of my, my passion for what they're doing. So this is
more than they, in our view, need to, which is good for them because that gives them time to pivot. But it can also be bad for them if they sort of mess around for too long.
Investors are experts and not authority figures. Don't bring on an investor to your startup that is going to be that's trying to be your boss, that's trying to order you around, that's trying to say, these are the things you should do. An expert says, here's what I know. This is my advice. There's a difference between orders and advice. Bad investors give orders. Great investors give advice.
You give them the Bitcoin, and then they try to yank the dollars back. And banks typically default, and PayPal, things like that, typically default to just giving you your money back. Like, I bought things off eBay. Like, one time a guy sent me an iPhone, it was bad. I called him up, I had my money back in like 2 hours. It's ridiculous. They don't want you to prove it or anything. Mm-hmm. So running an exchange is extremely difficult to integrate with the existing financial system.
Price and kind of as a reserve thing, it is what people believe it's worth, and I think all prices are really a function of supply and demand. And so if you believe that the supply side has high integrity and really is fixed, and if you believe then that demand can grow over time with more credibility, and there'll be dampeners in demand every once in a while and an exchange goes down or something, or a few people get arrested. But if you believe that the long-term trend on demand is up and supply is fixed, then by definition the price should go up over time. And that's what I've come to that conclusion.
On the regulatory front, because it's always asked, I was an early investor in PayPal, and we were sued by dozens of attorneys general, dozens. Cars Direct, which was a company that you could buy a car online. I didn't know it at the time, but that was illegal. And we got sued by 49 of the 50 attorneys general. The one state where it's okay is Michigan, right? Every other state, the dealers have paid off their state legislators, so you can't do that. And my point is that with Bitcoin, it's an awkward thing today to use to buy something, right? It's not easy. And in fact, I don't even think that's the main value. I think the blockchain is the more interesting part, the transmission, if you want to call it, network of Bitcoin. As a payment mechanism, it'll be a long time before Bitcoin comes close to being as interesting as PayPal.
I think if you just take a step back, I think there are a lot of questions from regulators around, what are we going to be able to track down the money launderers, et cetera, et cetera. I think taking a step back, I think these are all solvable problems, and governments and law enforcement will figure out how to deal with virtual currencies. And as that happens, and as people in government get more comfortable with virtual currencies, I think those regulations will move in a direction, so that consumers will get what they want. That's ultimately what's going to happen, right?
We have Virgin Galactic, but I don't know how many people are going to travel to space with Bitcoin.
So we've been investors in Bitcoin for a long time now, almost 2 years at this point, and we are quite bullish. I think you'd be hard pressed to find other investors who are more bullish on this space than us. I think we'll get into there's a lot of uncertainty around Bitcoin and how it'll play out, but fundamentally we think this is the most important innovation in the financial world in a few decades, if not longer.
Questions of access to capital for the entrepreneurs, especially those that have been underrepresented, and also for the investors, those who don't have access to a great deal.
I'm a big believer it'll take off. I wish I invested in some of the crowdfunding platforms.
There's a lot of revenue behind a company before, if it's a pure consumer company. And so I look at things like these crowdfunding platforms, and I think what we'll be able to do is refer companies like that, see them get traction, where there are a lot of consumers validating. So A, they get money, B, they get consumer validation, and it's that consumer validation that the rest of the investment community wants to see before they jump in.
This kind of group here, which is now the Old Girls Network.
We formed an unofficial alliance of 10 angel groups to share data, to share deal flow, and the theory behind that was, I'll use medical devices as an example. In our memberships, we might have 1 or 2 members that really understand medical devices, but if we share the deal flow between the 10 groups, and your group is one of them, then we might have 20 experts in that field.
But a lot of the angel groups that I've seen, you guys might speak to this, typically don't meet on a weekly basis. So besides the geographic location, everything has to be within 50 miles of our headquarters. It just allows the members to have more of an impact, more of a one-on-one kind of consulting relationship with their company. So,
you know, the kinds of connections and trying to almost bridge the gap a little towards what the VCs do, where you know you get the depth of the Rolodex or the depth of the connections or the support. And as an individual investor, there are a number of companies that I've participated with as a mentor, as an advisor.
Our information about our investors, saying we know what kinds of things really resonate with some of our investors, and you know we try to basically help them with some of the stuff, and we basically do that really, no really extra charge or whatever it is. It's just ex gratis.
The mission is to empower people not just to fund what matters to them, wherever they are, but also however they'd like to fund it. And so philosophically, equity crowdfunding makes a ton of sense. Yes, it's returning back to our roots from where it all began, but it's also people, by saying things like it's too risky or it's not right for people, it's a very patronizing tone.
Is in there that we support, like education for investors, and the ability to do parallel offerings, traditional, what we call Title III crowdfunding offerings, as well as Title II, targeting accredited investors simultaneously. So there's some good things in those rules, but there's also some troubling things there as well that could really harm the industry. So my business partners and I are still involved in the process in Washington.
Long-term impact of crowdfunding and what that's going to become in the future, and that it can impact all kinds of markets. And so we are really adapting it to, I would say, more a depth area. So women-owned business and particularly small business. And we see great potential, even variations on the equity, because a lot of the kinds of businesses we work for are not going to have the traditional equity exit. But
professional investors are watching what's happening on the crowdfunding platforms and then taking that as product market fit and then actually investing in the companies right away, far earlier than they ever would have. So
well, I think it's interesting because a lot of people say, oh my God, equity crowdfunding, I'd never do that. You can't get money after it. Lawyers hate it. You can have all those people on the cap table. Those same issues were brought up 15 years ago when angels started to be, really active. It's the same kind of thing now. It's just these changes are difficult and it causes some chaos, but we're going to work